Well, good morning, good afternoon, depending on when you're watching this. Steven Sitkowski here, and welcome to this week's edition of my Market Insights. Give you some of my thoughts on what's going on in the market, what you want to be watching for, what could influence the market, any potential strategies, all the good stuff. I'm accompanied by my sidekick, Mr. Charlie Brown, which is my 7-month-old puppy who was sleeping until I got up to close the closet door behind me. And I think he thought maybe I was headed through it like the wardrobe, that I was headed off to Narnia. But he feels better now that he has seen me take my seat. So one of my dreams when I got this dog is that I could have him with me while I was doing what most people would consider to be my work, which to me, it's my entertainment. It's my fun. But glad to have all of you here. It is November. Craziness. It's going to be 70 degrees here. I live up at elevation. I'm waiting for the season to change, right? The leaves have all turned. I want some snow. I want to go skiing. We'll get there soon enough. Anyway, hope it's great wherever you are. Quick reminder that what we do here is for educational and informational purposes only. It is not intended as investment advice. What's moving in the market these days? AI is definitely leading the charge. With NVIDIA, there was a deal that was done with OpenAI. They did a $38 billion deal. And the talk is that OpenAI is going to go public at some point. And they think the valuation is going to be in the neighborhood of $1 trillion. Imagine an IPO that gets introduced to the investing public with $1 trillion valuation. The numbers anymore are so big. But you know what? We could trickle that on down to the price of housing, the price of cars, the price of insurance. It's a problem with getting older. You remember how much stuff used to cost, right? ISM manufacturing number came in at 48.7. So that is the percentage of purchasing managers that are reporting expansion. So it's less than 50%, which is considered contraction, but not by a big margin. McDonald's, Palantir, AMD, they are all reporting this week. I will show you upcoming earnings, but these are going to be the biggies, the potential market movers. 10-year Treasury creep just a little higher. That's actually a wrong number. That's a typo. There we go. So it's 4.118, which is fine for the stock market. But if you recall last week, it was slightly under 4. And oil prices pretty steady at 61.36 a barrel. So here's a market breadth from last week. Wasn't great. On the New York Stock Exchange, 910 stocks went higher. Nearly 2,000 went lower. Same story on the NASDAQ, 1725 to 3231. Now, you want some good news? Look at the new 52-week highs compared to 52-week lows. So we're definitely still in a bullish market, and same with the tech-heavy NASDAQ. So looking back on last week, here's last week's heat map. We definitely see more red, don't we, than green. There's my buddy NVIDIA doing covered calls on 1,500 shares of that stock, up 8.71%. Amazon doing covered calls on Amazon, have a trade on Alphabet. They all had pretty good weeks. Oracle was down. There's Palantir, which is announcing earnings this week, was up last week. Consumer defensive, also known as consumer staples, 100% of the S&P 500 consumer staple companies that have reported beat their earnings, and it hasn't helped them. You know, there's just not an appetite right now for defensive stocks. Everybody wants to be over here. It's where all the money is being made. It is all about earnings, right? I think it was Larry Kudlow who said earnings is the mother's milk of the stock market. So then the question is, where are we forecasted to see the earnings in 2026? And here we go, Russell 2000. Now, the red is a little tricky. 40% of the companies in the Russell 2000, so these are small cap stocks, lose money. So the fact that they're going to do 42% better, I mean, it's a good thing. I do have a position in that index, and it has been a laggard. So maybe 2026 is going to be their year. And the rest of it is pretty evenly spaced. S&P mid cap 16%, NASDAQ 17%, equal weight S&P 500. That's where we assume all the companies are worth the same, 11%. The S&P itself 14%. 14% earnings growth is fantastic. If we get that next year, plus we get some rate cuts, I think we're in for another great year in the market. Seasonality. Here's some more good news. So we came through September, which is typically a down month, and it was up. October is generally the most volatile month, albeit slightly profitable. But based on seasonality, meaning history, it's clear sailing here for the next few months. You know, November, the market goes up on average 1.61%. December, about the same. January, 1.32. So we have seasonality on our side. We have earnings on our side. And we have the Fed on our side. Big winners for last week, C.H. Robinson worldwide up 23.5%. Teradyne about 22, Seagate Technology 18, Cardinal Health. It's funny, I go through these and I remember trades I've put on almost all of them. 17, Regeneron. There's Caterpillar, had a really nice week. You know, the industrial space has been pretty darn good. Fox up 11%. That's A shares. Fox Corporate 11 as well. Then you have the two alphabets, both up around 11%. Now the pullback, I mean, you don't need to be a technician to sort this out. So this is the trend, and look where we are now. So this is the percentage of stocks trading above their 50-day moving average. We like that to be over 50%. Right now it's at 40%. That's not good. So there's some weakness. You know, if we're going to talk about the strength, got to talk about the risk. Market sentiment definitely improved over the week. So we went from 37% bullish to 44% bullish, even though there was a pullback in the market, which is kind of weird. We went from almost 43% bearish to 37% bearish, still higher than the historical average, which is 31%. What we've done is we've shrunk people in the middle. It's almost like US politics, right? It's an extreme one side or the other. On a typical week, 31.5% are basically neutral. On the last reading here, it was 19%. This isn't this week's earnings. I apologize. I wanted to share with you the relative value of these various stocks. You know, when is high, too high, etc. And I'm going to tell you where people get messed up. And that is when they focus all kind of attention on what is known as the PE ratio. PE ratio is the price per share divided by the earnings per share. And by historical standards, there's no question that, PEs are high. The average for the S&P 500 is around 15, 16. But what I prefer to look at is the PEG ratio. So that is the PE ratio divided by the earnings growth rate. And frankly, anything under 3 is acceptable. And because the earnings are so extraordinary with a stock like NVIDIA, look where the PEG is. It's under 1, indicating a ton of value. Highest one on this list is Alphabet, formerly known as Google, but Broadcom is under 1. So what is my point? This market is not overpriced. Now, it may be priced to perfection, meaning that everything needs to work out just perfect for stocks to continue to move higher, but overpriced, not based on the earnings. So here are the big earnings announcements. Today after the bell, you got Palantir. Tomorrow after the bell, AMD. And then before the market opens on Wednesday, we have McDonald's. I don't really see anything else on this list, candidly, that has a potential to move the market. I think that's about it. All right, let's take a look at the charts. When in doubt, look at the charts. All right, where's the SPX, which is the S&P 500, and everything looks just dreamy. I mean, you can see little weakness right here. And I pointed out to you last week, this big move. And I told you, expect a little bit of a pullback, which we got. Seems like we have sort of found a baseline, however, a level of support. But when you look at the yellow line, that's a 50-day moving average. It is held for the last 6 months. We're trading above the 50-day. That line is sloping upward. All that is bullish. MACD is still green. Relative strength index right where it ought to be. On balance, volume strong. So bottom line, everything looks great. That's always nice to report. Now, having said that, subject to change, right? It's like the weather. So on the beautiful sunny days, go enjoy it. When things get a little dicey, put on a coat, right? It's our job to adjust. The market's not going to adjust to us. Anyway, I hope you have a fantabulous rest of the week. I will certainly see you next week. Until then, be safe, be blessed, and bye for now.